Welcome to the Explainer. Now, if you're a Moroccan student or just a beginner looking at the trading landscape in 2026, you are probably completely overwhelmed by the sheer amount of information out there. And let's be honest, a lot of misinformation too. So today, we're going to objectively demystify the exact pathways available to you, completely stripping away the hype. We'll look at the hard data and the most current structures for brokers and prop firms, focusing specifically on what actually works best for a student's budget and learning curve. There are no promises of easy money here, folks, just a clear, structured look at the tools you absolutely need to succeed.
Okay, let's dive right into this. Our agenda today builds your understanding step by step. We're going to start with brokers versus prop firms, then hit the top 2026 brokers, followed by the best prop firms. After that, we'll focus on futures, dive into the ultimate survival tool of risk management, and finally, look at trader profiles and frequent errors.
All right, Section 1, brokers versus prop firms. This tackles the foundational question every single student faces. What is the actual mechanical difference between these two paths?
To make this super clear, let's contrast the personal versus funded models. On one hand, you have the traditional broker. This is your own hard-earned money. The massive advantage? Total freedom. You want to hold trades over the weekend? Go for it. Trade the news? Sure. But the flip side is that you carry 100% of the personal financial risk. If you lose it, it is gone for good. Now contrast that with the funded model, the prop firm or proprietary trading firm. Here, you're trading with allocated capital provided by the firm itself. The risk to your own wallet is strictly limited to the upfront fee you pay to take their test. But in exchange for playing with their money, you have to follow incredibly strict, unforgiving rules.
To really shatter any illusions of easy money, let's break down the step-by-step business model of a prop firm. You don't just sign up and start throwing their money around. Step 1, you pay an evaluation fee. Step 2, you take a really rigorous test on a simulator to prove you can hit a profit target without breaking their strict loss limits. Step 3, if and only if you pass, you finally get a funded account. And Step 4, you only see a payout if you actually generate profits while continuing to perfectly follow their daily and maximum drawdown rules. It's a tough journey, specifically designed to weed out undisciplined traders.
Moving right along to Section 2, Top Brokers 2026. What if you do want to use your own capital and have that total freedom? Let's check out the landscape.
Now, what's really interesting here is Interactive Brokers taking that #1 spot. It is the top objective choice for learning multi-asset investing. You can trade real stocks, ETFs, and options without relying on dangerous leverage. Now, if you just want a simpler interface to get your feet wet, XDB is highly ranked for beginners. And if your specific goal is trading Forex or CFDs using classic software like MetaTrader, then Pepperstone or OANDA are going to be your go-to options. But for pure education and building long-term real-world skills, Interactive Brokers definitely leads the pack.
But hey, what if you don't have thousands of dollars of your own capital to risk? Let's shift our focus to Section 3, Top Prop Firms, and explore the funded pathways.
Here is a pedagogical breakdown of the top prop firms out there. FTMO is still incredibly well known, and from a learning perspective, they're fantastic because their strict risk management rules literally force you to become disciplined. If you prefer a slower, more progressive approach, like swing trading where you hold positions a bit longer, the Fivers is structured perfectly for that. And then there's FundedNext, which is highly accessible and super popular among Moroccan students right now. But a massive disclaimer here, guys. Firm rules, geographical restrictions, and payout conditions change incredibly fast in this industry. You must always officially verify their current terms before you hand over any money for an evaluation.
Next up, Section 4, Focus on Futures. This is a specialized, highly relevant niche for modern students that we really need to talk about.
You see, futures trading is an entirely different beast from trading simple Forex or CFDs. It requires professional-grade tools. You aren't just looking at basic line charts anymore. Mastering futures means learning platforms like NinjaTrader or Tradovate and wrapping your head around advanced concepts like order flow, footprint charts, and volume profile. You are literally watching the actual volume of buy and sell orders hitting the market in real time. If you want to go this route, prop firms like Topstep and Alpha Futures cater specifically to this professional style.
And what exactly are you trading in the futures market? Well, these are the heavy hitters. You've got ES for the S&P 500, NQ for the NASDAQ, YM for the Dow, RTY for the Russell 2000, CL for crude oil, and GC for gold. What you absolutely need to understand here is that every single tick, which is the smallest possible price movement, has a very specific dollar value and margin requirement. You have to know exactly how much a 1-point move in the NASDAQ is going to cost you before you ever click a button.
So, the crucial point is, how do you avoid losing it all? That brings us to Section 5, Risk Management, arguably the most important foundational science you can learn. Let's anchor this with a very realistic scenario. Let's say you just paid for a $50,000 funded account evaluation. Sounds like a ton of money, right? But remember, you don't actually get 50 grand to lose. You are bound by a maximum drawdown. Let's say that drawdown is $2,000. Well, that $2,000, that is your actual lifeline.
When you look at how many consecutive trades it takes to fail, tiny percentages become absolutely crucial. If you risk 1% of your nominal $50,000 account on a single trade, that's $500. If your maximum allowed loss is $2,000, you only need 4 consecutive losing trades to completely blow the account and fail the test. Just 4 trades, and trust me, that happens all the time. But if you risk just 0.25% per trade, that's $125. Suddenly, it would take 16 consecutive losses to blow your account. By simply lowering your risk per trade, you drastically increase your runway. It's like giving your strategy actual room to breathe and work.
All right, bringing it home with Section 6, Profiles and Frequent Errors. Let's map out the right tools for the right student profiles and look at the fatal mistakes to avoid.
And this brilliantly illustrates how your starting capital and your goals should completely dictate your platform. If you're a student with only $500 to your name, you should absolutely not be depositing that into a broker to trade with massive leverage. One bad move and you are at zero. For you, a prop firm evaluation is the smartest route because it limits your initial risk. Conversely, if you are looking to build a long-term retirement portfolio and buy real assets, a prop firm is completely useless to you. You need a trusted broker like Interactive Brokers. Your unique profile is what dictates your path.
Before you choose that path, you have to memorize these fatal traps that wipe out beginners every single day. Using too much leverage, that turns a tiny market ripple into a massive account loss. Trading without a stop loss, financial suicide basically. Revenge trading, where you try to immediately win back a loss out of sheer anger, will completely blind you. Ignoring the specific trailing drawdown rules of your prop firm will get you disqualified even if your account is in profit. And finally, trading during volatile news events without understanding how liquidity dries up will wipe you out in milliseconds.
We're going to leave you with this sobering golden rule from KRIT Academy, which perfectly captures the philosophy we've explored today. The first goal is not to win big. The first goal is not to lose your account. Trading is a profession of defense first. Protect your downside. Choose the platform that actually fits your educational needs, and practice on a simulator extensively before you ever risk a single dollar of real money. Thanks for joining us for this explainer. So before you open a chart tomorrow, ask yourself, are you trading to win big, or are you building the iron discipline required to simply survive?